Hello everybody, welcome back for another video. Hope you're all having a great day and that you are all doing well. To start things off, CBOEBZX exchange withdrew its VanEck Solid X Bitcoin exchange traded fund proposal on Tuesday. According to a filing dated the 17th of September, a proposed rule change to publicly list shares on the VanEck Solid X Bitcoin Trust was withdrawn on the 13th of September. A decision on the proposal had already been delayed a number of times. And the U.S. Securities and Exchange Commission, or the SEC, faced a final deadline of the 18th of October to determine whether to approve or reject what could have been one of the first Bitcoin ETFs in the country. The news comes just a week after VanEck and SolidX began offering shares of the trust to qualified institutional buyers, entities with at least $100 million in assets owned or invested under a Rule 144A exemption. In the nearly 3 weeks since its first announcing the product, one basket of 4 Bitcoin worth around $40,000 was traded. That means no one was interested. VanEck appears to have changed near-term plans very recently. In an interview on the 4th of September, VanEck head of ETF product Ed Lopez told CoinDesk that the company would continue to pursue an exchange-traded product, explaining, and I do quote, "We strongly believe the marketplace and many investors would be better served to have a regulated product out there, and this is just one small step towards that, and right now it appears to be only available to institutions," end quote. Tuesday's filings marked the second time that VanEck and SolidX withdrew the proposed ETF. The companies withdrew the same ETF proposal in January after a prolonged government shutdown threatened to force a rejection. For those of you who have no idea what I'm talking about, a large part of you should definitely understand what's going on. A lot of institutions, rich people within America, the United States, have been trying their best over the last 5 years to get an exchange-traded fund, a Bitcoin ETF, to launch within the region, the country. As of yet, the last 5 years, not one has been approved. None of them have been approved thus far. The issue seems to be, and this is maybe, I mean, everyone has their own motives. Everyone, I'm not part of that company. For some reason, VanEck SolidX continues to try to, or rather the CBOE more so, it continues to try to put forward a Bitcoin ETF proposal to the SEC. The SEC says, give us more time, give us more time, give us more time, no. And then they go, okay, so we'll refile it. Like, tell us exactly what we did wrong. And they go, it's this, 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 and this. And they go, okay. And they refile it. And then the SEC goes, give us more time, give us more time, give us more time. No. The people from CBOE have continuously tried to relist, or rather put through the proposal once again to the SEC, but the SEC continues to say no. So I assume on my side that someone from the SEC or some other entity must have told them this is not going to go through. You're missing something once again. It's not the right time. It's not the right so-and-so, and therefore you're not going to get it. And I think that they withdraw their proposals as a way to try to save face, if you will. You know, nobody wants a rejection, so let's withdraw it ourselves because we really didn't want it in the first place. Sure. If I am correct, and I think I am, I'm pretty sure that the NYSE ARCA, the New York Stock Exchange, has also put a proposal for a Bitcoin ETF into the market, or rather with the SEC. I think this is what happens. I remember reading this. And if so, it seems logically more likely in my eyes that the New York Stock Exchange would get approved for the first Bitcoin ETF over the CBOE. Just going to throw that out there. And I think the approval date is also somewhere around the 18th, 19th, 20th of October as well. We'll obviously get more news about this as time goes on. However, I think it would just be smart of them to stop proposing Bitcoin ETFs to the SEC. The SEC is not going to say yes anytime soon. This happened a couple days ago. There we go. It says SEC Chair Clayton has said a would-be Bitcoin ETFs have work left to be done. He pretty much said that he sees nothing in his mind that any ETF proposal thus far has been able to pass through. He says, and many other people in the SEC have declared that they are concerned with market manipulation, price manipulation, this happening, so and so and so, and that they need more, that they need more regulated cryptocurrency exchanges and spaces and derivative products offered to investors, and therefore this will allow them to go forward, which pretty much means, especially if you have been listening to cryptocurrency podcasts, a lot of them have been discussing this, exactly what the SEC means. It pretty much comes down to the SEC needs to feel comfortable with cryptocurrencies in order for them to say yes to an ETF, and the only way that they are comfortable with anything passing through is if they understand what's going on, they know what's going on, any information that is passing through any network goes to them, or if they have well-known, air quotes, already trusted institutions who are getting into the cryptocurrency space, and therefore their price metrics can be more trusted than, say, something from CoinMarketCap or CoinCodex, or even something from Coinbase. And this is why we see a huge rush by the people from the New York Stock Exchange and the NASDAQ and Fidelity, et cetera, getting into the cryptocurrency space as a way to make sure that when institutions or normal people decide to get into the cryptocurrency market, that they have a trusted, regulated space where everyone's data will be collected and therefore then sent to government agencies. And this is what the SEC and the CFTC feel comfortable with. And until that happens, we will probably not have any type of ETF or otherwise going into the market. Why didn't I think that was a real word? Going into the market. Anyway, the point is, the Bitcoin market does not need an ETF. This was a very huge thing in 2018 that everyone kept on saying that we would get an ETF and that the market would only go up when we got an ETF. Lo and behold, the market went up without an ETF. And anyway, let's move on. Next up, messaging app known as Line has officially launched a cryptocurrency exchange service for its 80 million users based in Japan, days after the platform received final regulatory approval. The Shinjuku-based messaging provider, which is 73.36%, why it's so accurate, owned by South Korea's Naver, said in a statement on Tuesday that the new exchange, dubbed BitMax, because why not, is now live with trading of 5 crypto assets, and you probably already know what they are: Bitcoin, Ether, XRP, Bcash, and Litecoin. According to the statement, the service was introduced in stages from 3 p.m. Japan time on Tuesday and available first on Android devices. It can be accessed via the Who Cares About That going on further. Line said in the announcement it currently has 81 million monthly active users in Japan and 164 million globally. It operates the crypto exchange through LVC Corporation, a subsidiary which was awarded a cryptocurrency exchange license by Japan's Financial Services Agency on the 6th of September. BitMEX is available for residents in Japan with a Line account. No fees are charged for trading, blah, 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 et cetera, et cetera, et cetera. Line, Telegram, what was the other one? Not WhatsApp. What's the other one? What's the other famous one? I can't remember the name. Kakao and another service as well in Asia. These were all the largest messaging apps in the world who were trying to launch their cryptocurrency exchanges and or platforms and or their own cryptocurrencies before anybody else did. At the moment, I believe Telegram isn't launching until Halloween. Gosh, what are the names of the other ones? It's so weird because they have so many weird names, and I'm like, I'll remember this, and I don't remember any of them because they have such weird names. Anyway, Line has finally launched. This is significant because, one, they have 80 million users. Even if you take into account 10% of them using the cryptocurrency trading platform, that's still 8 million people. And even more so, we know or have seen that historically Japan has taken hold of the cryptocurrency industry because people, according to documentaries that I've seen, people within Asia are, I don't want to say more savvy when it comes to cryptocurrencies. They understand the actual usage, future usage, and the potential gains that can be made from investing in the cryptocurrency space. While many other countries around the world have not done so or don't see the need to invest in cryptocurrencies when they have traditional financial products. So I assume as time goes on, we will get more news about this. I feel, rather, I'll put it to you this way. We've seen a number of these exchanges, not a lot of them. We've seen a couple of them launch over the last couple of months, whether they be from a messaging app or some other institution. I wonder how often their price metrics or the information from their exchanges gets integrated into things like CoinMarketCap or CoinCodex or any other coin pricing website, simply because I feel like crypto markets, maybe this is also, thus far, I have not seen these things integrated price-wise into the price metrics that we currently use within the cryptocurrency space, because I'm pretty sure we would have a very different outlook on the cryptocurrency market if a lot of these things were integrated. Who knows? I assume they will be. Maybe they need to reach a certain amount of users, a certain amount of volume. But anyway, Line has launched their crypto exchange, 80 million users. I mean, and even more so, I assume that they're going to have a rollout to the 164 million globally, which is completely insane. And yeah, let's move on. In news that should not shock anyone, the USA's fourth largest bank has announced it will develop its own cryptocurrency for international transfers in 2020. In a press release on the 17th of September, Wells Fargo said its new remittance platform would form an international payment network based on what it describes as DLT, or Distributed Ledger Technology. Payments will work using a dedicated platform and an asset called Wells Fargo Digital Cash. Terrible name. Pegged to the US dollar, the concept will undergo a pilot for international transfers next year, says the bank. In the future, multiple applications will use the platform as their basis. They said, "We believe distributed ledger technology holds promise for a variety of use cases, and we're energized to take this significant step in applying the technology to banking in a material and scalable way." Wells Fargo Digital Cash has the potential to enable Wells Fargo, to remove barriers to real-time financial interactions across multiple accounts in multiple marketplaces around the world. Wells Fargo thus follows the U.S. largest bank, JP Chase, in launching a digital currency as a solution to changes in the global financial realm. We will see how this works out. A lot of banks have started either creating their own blockchain systems, working off of someone else's blockchain system, slightly announcing their support for stablecoins, or announcing that they are creating their own stablecoin something in the relative near future. As of right now, the one that we've heard about the most, obviously, has been JP Chase Coin, which is also a terrible name. They don't think about these things beforehand. Can you imagine being like, "Hey, how are you paying?" "I think I'm going to pay with JP Chase Coin." "Don't accept it?" "How about Wells Fargo Digital Cash?" "No?" "All right." But anyway, thus far, JP Chase has been, I think, the most successful. I assume it has to do with a lot of elbow throwing and or money hitting a lot of desks, telling people that they have to or that they should do this as an incentive. I believe a lot of these are going to not make it. I'm expecting myself, what we have right now is that banks are desperately trying to stay relevant, my opinion. So what they're doing is, logically, you wouldn't be creating your own coin if you weren't trying to stay within the space. What I think is going to happen is multiple other large banks around the world are going to start creating their own coin. And then they're going to come to the conclusion, if they're trying to send money back and forth between each other, is guess what? None of our stuff is interoperable. I can't send it to you because we made our own systems. Oh my gosh. So what's going to end up happening, I am certain, is that by mid-2020, I assume all of this will be released before Libra gets released. Banks were trying to release their own systems, their own coins. They're going to realize very quick that they're not interoperable, because I can assure you there are going to be very few banks around the world. This is why I said they need to think about the name. Other banks, whether they be small or large, are probably not going to be like, yeah, we've adopted Wells Fargo Digital Cash. They're going to try and create their own coin, and their systems won't work together. So what's going to probably end up happening is by the end of 2020 or 2021, the BIS, the IMF, and the World Bank are probably going to try and create their own world banking system that every other bank then has to flow through them. It's the only logical thing right now, because no other bank is going to... It's one thing to partner with the bank, but to use their currency is something else entirely different. This is obviously major news. One of the largest banks in the world has created their own, or is creating their own digital currency. It says Wells Fargo to pilot international or internal settlement service using DLT. Awesome. Not really. But this is going to happen. We can't stop it at this point. Bitcoin and other things have become, and I don't even want to use the word threat. It's more so, why would banks be creating systems like this if they didn't see some type of a futuristic threat from the current actual decentralized blockchains that we have out there? Anyway, we will receive more news of this as this goes on. I'm expecting by the end of this year, at least 3 more banks will come forward talking about their own coins. Anyway, let's move on. Next up, Germany's government has passed a new strategy outlining the ways the leading EU state is planning to use blockchains, approved by Chancellor Angela Merkel's cabinet on Wednesday. The strategy sets the government's priorities in the blockchain space, such as digital identity, securities, and corporate finance. It also sets out that the state won't tolerate the threat to state money by stablecoins like the Libra coin from Facebook. Read that wrong, but still the same thing. The strategy came out as a result of the broad consultations with the industry, which started this spring and involved 158 experts, wow, and company representatives who submitted a combined 6,261 responses. The approach embraces open source software and the government as the ultimate arbiter of tech competition. The most important part is they talk about smart contracts, smart so-and-so, blah, 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 blah. The most important part is here. While no cryptocurrency was named in the document as an object for regulation, the document underscores that Germany doesn't want any stablecoin to get dominance in the country as well as in the European Union. The document states, and I do quote, "In principle, there is a regulatory regime for stablecoins in the European Union. At the European and international level, the federal government will work to ensure that stablecoins do not become an alternative to state currencies," end quote. I like the fact that they actually use the word stablecoins in their document. I find that word fascinating, that they, because usually governments and banks don't openly come out and say why they're doing something. They will say, we've created this because it's cool, it's awesome, it's new, it's fresh. Not like, yeah, no, we're doing this so simply that this thing that we are afraid of won't become competition. Like I said earlier this year as well, I feel like there have definitely been discussions, whether it be in the Americas, in Europe, parts of Africa, even in Asia, where banks and institutions have come forward and said, I feel like we should start adopting stablecoins. Part of the problem is that many stablecoins are pegged to the US dollar or pegged to the usually US dollar. We have a couple that are pegged to the euro, like 2, maybe, and a lot of them that are pegged to Asian currencies. And if any of these becomes popular, that poses a problem for many other countries out there, especially with Tether, and there's another one that's like rising in the ranks right now. I can't remember exactly what it's called. Anyway, the point being, I assume that a lot of this is coming from or is aimed specifically at Libra. While they might not have mentioned it explicitly in words, it's pretty certain exactly what they're doing. What I find, and bear with me, what I find the most interesting is that they spoke about something last Thursday, and it got approved on Wednesday. There are many countries around the world, not saying any names, who continue talking about regulation, and it takes them about 3 years to do so, while Germany takes them about a good 6 days, 5.5 days to launch something. Anyway, cool. They don't like Libra. Where do we go from here? I assume we're going to get more Libra hate But I still feel like behind the scenes, this is just how I personally feel about the entire situation. There have probably been discussions with people from Libra and or Facebook and or Calibra, whatever you want to call it, who have sat with many members of different European countries. There are a number of European countries. First of all, we had news last week that it appears like, you can Google this, that Germany is about a toe away, not even a step, a toe away from entering into a recession. If the largest economy within the European Union is entering into a recession or is close to entering into a recession, one can only assume that other countries around Europe are probably not going to also do as well if Germany is the largest economy. Secondly, the people from Libra and Calibra, thus far, we know that they are sharks. They're not doing this to help the world. They're doing this to fill their own pockets. One can only assume that probably 3 to 5 members of Libra at some point went to different European countries, maybe multiple, and sat down with their governments and said, hey, this is what we're doing. We see that you could use some help, and therefore we can help you. I don't feel like there would be any other reason for there to be such a huge amount of backlash from what's been going on. I'm as I say it out loud, I'm fairly certain this is probably exactly what happened. If the people from Libra have been met, remember a couple days ago, they were met by, 26 different countries? I assume that the people from Facebook also met before with those 26 countries to try and talk to them. I assume talks went okay because we didn't hear the day after 26 countries going, ban Libra. Remember all that talk that we heard before from American politicians and everyone else who was screaming until they were blue in the face? Time to ban Libra. And now we don't hear about it anymore. Germany and France seem to be the only two countries who are heavily opposed to Libra, which leads me to believe at least 5 other countries within the European Economic Zone have probably expressed interest to Germany about using Libra, relying on Libra, so-and-so with Libra, or becoming a partner and running a node with Libra. This is just all speculation, of course, in my head, but it does make a lot of sense because there seems to be too much of especially as we are on the cusp of a worldwide recession. It's like a hyena circling a smaller animal. I couldn't think of a smaller animal because it's fairly certain right now that everything is not coordinated, probably coordinated. Anyway, I have my own. I'll take off my tinfoil hat. I put it in the corner. Let's move on. For those of you who are unaware, I do apologize for the bad news. Bitcoin abandoned its stable levels around $10,200 while crashing within an early hour on Thursday. In the early hours, Bitcoin crashed towards $9,800, erasing 3.7% from its price. Selling pressure increased volumes to around 17 billion US dollars, equivalent within 24 hours. The BTC market cap dominance is near its unusual or usual levels at around 67%. As altcoins slid as well, except for a few anomalies, most of the market is down, especially true of the most liquid coins and tokens. This type of behavior has been observed multiple times for Bitcoin. When appreciation or a slide happens within hours, this time the slide is relatively small as Bitcoin has erased more than $1,000 in these types of flash crashes normally. I wouldn't call it a flash crash. It's more of like a heavy slide down. It's like going down like a really hot slide and it hurts. You go, I'm okay afterwards. Bitcoin yesterday and the day before, as we were talking about the potential altcoin rally, altcoin bull rally, alt season. I knew the word season was somewhere in it, and I thought of season and salt. The point being, Bitcoin was going down while the rest of the market was going up. I expected Bitcoin to not be able to hold that 10,200. It was very odd that Bitcoin was constantly going down by 1 or 2% every single day as the wider market was going up. A lot of other coins that we're also going to talk about in a couple of seconds who were doing exceptionally well as Bitcoin was not. According to the margin trading monitor DataMish, the sudden dip triggered $100 million in BTC long positions on BitMEX. At the moment, there doesn't appear to be, I assume we will get news as the day goes on, there doesn't appear to be any significant amount of news as to why Bitcoin dropped. Speculatively wise, I've seen multiple places talking about that Bitcoin. Apparently, there was news about a scam that happened on some exchange or website that none of you have ever heard of, and therefore this could have been the reason for it. Typically, before in the past, whenever we had news that Bitcoin was was hacked, or some exchange got hacked. Bitcoin itself not being hacked, mind you. That's not it's never the blockchain. It's never the network being hacked. It's always a third or fourth party centralized exchange that was hacked, and therefore Bitcoin goes down. No real logic, but apparently that could have been the cause for it. Two things seem more logical in my mind. We've been talking about this range that Bitcoin has been trading in. For those who are not looking at the screen, is pretty much a graph of that exact same range that we have been talking about for the last, about a good 14, 15 days. Part of the range ends at around 9,800, give or take a few pennies, dollars, whatever. At some point, one can only assume, we've been following this same exact chart since July, Bitcoin within the next couple of days is probably going to float around 10,600 once again, fall back down, and sometime around October, mid-October, we will be at the end of the range. That is not to say that we will continue with this range. However, if nothing significant happens, this is where we will go. I still personally think, many other people do not, I still personally think that Bakkt will have some type of movement on the price, and I think it will be a positive movement. We have broken out of ranges before, and a new trend kind of occurs. I think this can happen. I don't think that the market will be as lull as it currently is right now with Bakkt launching, and then I assume giving news every day or every other day as to exactly how much money they have in their platform. The other thing that could have triggered this downward movement, besides just the actual trend line, is the not even a rejection of the ETF. It's the early withdrawal of the ETF. We have seen historically before in the past, and I mentioned this about 2 or 3 months ago where I had the other tabs open, is that before in the past, whenever we have seen an ETF not be approved, Bitcoin's price has slid down. Why? Who the heck knows? Who the heck cares? The point being that the market always reacts negatively to any single time that something with an ETF gets rejected or withdrawn. This, to me, seems the most likely as the reasons why Bitcoin has gone down in price. However, if this range is any indication, I would assume, like I said, within the next 3 or 4 days, Bitcoin is going to go back up following the range, and I expect it to break out. That is not financial advice. No one empty your bank account or any type of money into the market simply because I said I think so. I do not know the future as much as I would like to. Point being, Bitcoin has dropped. A lot of people have been trying to figure out why, and as of right now, we do not know why. All right, let's move on. The kind of semi-ish, not really, even close to finishing things off. Borrowing rates skyrocketed on Tuesday. In a corner of the markets the public rarely notices, but that is critical to the functioning of the global financial system. Wait till you hear this. The spike in overnight borrowing rates forced the New York Federal Reserve to come to the rescue with a special operation aimed at easing stress in financial markets. It was the New York Fed's first such rescue operation in a decade, the last occurring in late 2008. For those of you who remember what happened in 2008, yeah, they said it's unprecedented, at least in the post-crisis era. On Tuesday, the New York Fed launched what's called an overnight repo operation, during which the central bank attempts to ease pressure in markets by purchasing treasuries and other securities. The goal is to pump money into the system to keep borrowing costs from creeping above the Fed's targeted range. The first attempt by the New York Fed was canceled because of technical difficulties. Minutes later, the New York Fed successfully injected $53 billion US dollars into the system. The episode demonstrates evidence of emerging strains in financial markets and raises concern that the Federal Reserve could be losing its grip on short-term rates. The funding markets are clearly stressed. This was said by Guy Lebaz. It's going to require Fed action. The New York Fed announced plans late Tuesday to hold another repurchase agreement operation on Wednesday that would aim to repurchase up to an additional $75 billion US dollars. So we are starting to see, and this is typically, when stuff starts to go awry, because normally these things happen behind the scenes. There's always some type of an easing, a stress release. Something is always happening behind the scenes to make sure that markets are doing and looking okay. When we start getting news that the New York Fed is pumping over $100 billion into the system and buying up things in order to try and stimulate or to even out the market, that means things are not doing well. Tying directly into this, the Federal Reserve on Wednesday cut interest rates again by 25 basis points to a new target range of 1.75 to 2%, and telegraphed a strong likelihood of one more rate cut by the end of the year. Continuing to cite global concerns, the Fed said business investment weakened since the Fed's last policy setting meeting in July, when it cuts rates for the first time since 2008. Once again, they're doing the exact same things that happened in 2008, because for those of you who were alive, you remember what happened in 2008. The market completely turned to dust. The Fed also added new language in its statement, noting that U.S. exports have also weakened, underscoring the impact of the trade war on the central bank's reading of the U.S. economy. Little else was changed in the statement beyond the new description of household spending as rising at a strong pace, reinforcing Fed Chairman Jerome Powell's commentary over the past few months, highlighting the American consumer as the driving force for the U.S. economy in a favorable place. For those of you who don't get it, or rather, interest rates have been cut, and they have been cut more so around the world as well, which we were also just talking about, in an attempt to get more people to spend. They've cut rates once again. They're probably going to try and do it once again before the end of the year. They're trying to make sure that the economy stays where it is. I will tell you the truth. I would love, and this is just going to throw this out there, I would love to be, everyone would. I would love to have a very rich family, just for more than one reason, because I wonder what happens to these families. First of all, any cracks in the system that we see has already been telegraphed and seen months and maybe even a year before by other financial entities. If you look at documentaries of what happened after, like immediately after the 2008-2009 crisis, what ended up happening is that around when stock markets fell, when real estate collapsed, the people who became the richest and are even richer after the market collapsed before are the same exact people who were as rich before. What ended up happening is that they sold months before into whatever else they needed to sell that was completely stable. And then once the market collapsed, they started buying up huge, massive amounts of real estate and land and company and all this other stuff. And they became hyper mega billionaires. So the whole point is that I wonder what discussions happen within these families, like these really rich families who continue to get richer, because they know exactly when markets are going to fall. Like if we're getting news about this now, like if this is the news that is dropped on us, one can only assume that the news that actually goes on behind the scenes in boardrooms that we can't even begin to imagine is probably them telling, like, okay, this is going to go bad. Start selling this slowly over the course of a 12-month period. Put your money into this. It won't drop more than 3%. And then therefore, when everything collapses, we can buy everything back up again. Quite fascinating. At least I find it to be so. What I think is, I don't want to use the word evil. What I think is bad is that whenever the economy is not doing well, and you can find, even if we just focus on the states, every, whether you like them or not, every single U.S. president has done so. They always make sure to announce that when the economy is not doing well, that the American people or anyone else, I'm sure this happens in other countries as well, that they should go out and start spending their money. Because what happens is when you lower interest rates, when you make it less expensive to borrow money, people start borrowing money. People start getting more credit cards. People start getting more mortgages and all this other stuff and start spending more money than they actually have in the government's attempt to continue to prop up the economy. But what ends up happening is that when this all comes crashing down, the people who are the most affected are the people who were borrowing all that money with the government telling them that it was a good thing that they were spending their money in an attempt to keep the market up when the government and the banks know that things aren't going well. If they're pumping, why would you be pumping billions of dollars into a market that you thought was going to continue to do well? It doesn't make any sense. You would be receiving money, not giving money in an attempt to prop something up. Anyway, the point is, I found it rather fascinating, and I'm not joking. The moment I woke up, my friend had texted me. We were talking about the it's very funny how my life has changed. I'm no longer excited by buying video games or buying new things that I don't need. I was excited this morning looking at my phone to see that the Fed had cut rates. That's where my life is now. And more so, I remember checking the price of Bitcoin immediately after, and I saw that the price had gone down. And I also got a little happy because, the price is, is a little, when it's cheaper, it's then cheaper to buy. The point being, the rates have been cut, and the New York Fed has pumped, what is that, 50, 70, 120 billion plus dollars that has been advertised, that we know that has been pushed into the markets. I wonder where this is all going to go. Couple of days left. Bakkt is going to launch. There's a podcast. Hold on one second. Hold on. I'm going to actually find it while I'm on here. I was going to say I'll tell you all later, but I'm going to try and find it right now. Give me 1 second. Opening up my phone. I think this is a very good podcast for everyone to listen to. Where is it? Here we go. There's a podcast called We Study Billionaires, the Investors Podcast Network. We Study Billionaires. The podcast to listen to it's called Tip 260, Bitcoin Math and Value with Plan B. It came out 4 days ago. It's called Tip 260. It should be their latest podcast that they have out there. I don't see any newer ones. It is the most fascinating thing I have ever heard in my entire life. I have a friend, thank goodness, who just recently got into the cryptocurrency space, just recently got into Bitcoin. He's doing all he can to accumulate as much Bitcoin as possible. As I was walking down the street listening to that podcast, it's so weird. Everything that's happening right now has been forecast at some point by other financial entities, financial analysts, what have you, so on and so forth. The stuff, not the host, the guest said on that show has led me to believe that Bitcoin is going to be the largest thing on this planet within the next couple of years. If you get a chance, please. It's called We Study Billionaires, and it's called, Tip 260. The guy pretty much talks about the future of Bitcoin, what charts are saying, and why institutions are throwing as much money as possible into the cryptocurrency space. I discussed this sometime last year. I said it's very weird because one would assume with prices crashing, as we've seen before, most people, most institutions don't dump their money into it. The New York Stock Exchange, the New York so-and-so, the blah, 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 you've heard all the names before. Getting into cryptocurrencies 4 years ago, staying into the cryptocurrency space, announcing at the beginning of this year that they loved that prices were going down in 2018 so that they could buy up more because they're all looking at the exact same charts. And that guy talks about the charts and where chart-wise over the last years they've seen Bitcoin going and what the charts are saying exactly where Bitcoin is. It's please, like by all means, really listen to it. It's going to change your entire perception of the world that we live in and just of how big that Bitcoin is actually going to be. That's kind of the last thought that I have to say on that. As always, a very special thank you to my Patreon supporters, Professor Wally from Gunbot University, Adam Graysick, Mohair Maroney, Master Ventures in Thailand, Brady Niels, Woody and Daisy, Triple Lemon J, Jared Schneider, Wise Night Owl, 242 to the World, Crypto Joe, Bankroll Network, Adobo, Mill, Wheezy, JR, Mechanic, Strange Radio Central, Crypto Artist, Cole D, 3D, Cryptopolis, Nicholas, Runner with One Piece, One Love, Damien, Setsuna, Nick Kanaya, Richie Rich, The Third, Vlad the Impaler, Crypto and Beer Shipmate, Paxis, Nick Mangialavori, Anthony Charles, Jim Gardner, Jeremy Fox, Minting Coins, Miller Hitch Chest Every Day, and Kyle Skips Leg Day, and yes, to Crypto. Thank you all very, very much for your support at the moment. Those of you who are not looking at the screen, Bitcoin it's up more than it was when I woke up. Bitcoin was at 9,650? Now a couple dollars away from 9,900. I could see a pop over 10,000. I like to be pessimistically optimistic. I go, okay, it's going to go down. And if it goes up, I'm like, yay, because then it's the opposite of what I thought it was going to go. I'm still expecting a drop. The coin that is still green, only coin in the top 10 is Lumens. Apparently, Lumens last night, for some reason, shot up to an equivalent of 40%. No real reason why as of yet. Nothing appears to have, what's the word? There's been nothing in the news as to why Lumens would have shot up so much. However, here we are. I still believe, don't be surprised within the next 5 or 6, 7 days if we hear some type of confirmation or news about a major company using Lumens or the IBM WorldWire thing having launched. That's all I can think of, because this is a bit too weird. Lumens is never in the news. There's no real news about any partnerships that have openly come out or formed in the last 3, 4, 5 days. And also, the only news that we've had about Lumens in the last 5, 6, 7 days has been about their massive airdrop. Typically, prices don't rise when you dump billions of coins onto the market, especially not by 40%. So, I'm assuming that within the next week, we are going to receive information. We have to. Something is going on behind the scenes that would have caused the Lumens to pump by 40% over the course of a 36-hour period. Just seems a little weird. Some coins are in the green. IOTA's in the green. And that's about it. 0x. Bitcoin Diamond, 12 million. We'll see what happens by the end of the day. I'm not holding my breath. Rather not anymore. You get lightheaded and die. Didn't mean to say that out loud. The point is, this is what's happening in the market right now. I hope you all enjoyed. Hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. Hope it's absolutely fantastic. Thank you all once again for watching and or listening. And I will most certainly be talking to you all soon. See you.